Okay, so I don't know if you're in here. You might be in here. Is Mario Moreno?
No, Giron. Giron.
Giron.
Yeah.
Giron?
Mm-hmm.
Oh, what's your email?
It's my last name, Giron. TMN as in Mary. 1113. Yeah, 1113. At gmail.com. It's a long email.
Oops. Which phone number?
909-333-9942.
What's your address?
2229 Julius Avenue. Yeah.
So I just created it in there, Mario.
Mm-hmm.
So yeah, there you are. Oh, that didn't help me. Mario. So our system's smart.
Mm-hmm.
Hello, everyone. We'll get started soon. Hello, everyone. Sorry for the delay. Let's get started. Okay, can everyone see that?
Yep, got it.
Yep.
We're doing transfer property. Here we go. Today, transfer property. Woo! This is always a fun one. All right. Property tax year begins on July 1st and ends on next June 30th. The second installment of the become delinquent not paid by when?
D, December 10th.
It is April 10th. Remember, they're on what do you call it? A corporate year. They go from July 1st to June 30th of next year. So the second installment is the one that's due in the spring, which means it's due by February 1st, late by April 10th. So the deadline for filing a homeowner exemption claim for full exemption with the county assessor is what? Where did Kathy go?
February 15th. I don't know.
February 15th. Does everyone know what a homeowner's exemption claim is? So, no? Yes, maybe so. So a homeowner's exemption claim is it's an incentive allowed by the state to receive a discount on your property taxes based on certain membership, not membership, but profiles, these things. So for example, the most common is homeowner exemption. If you did a homeowner exemption, you get a $7,000 reduction, which means if your home was valued at $500,000, you're at 1% of that is going to be $5,000. Instead, they allow you to deduct $7,000 off the value of the home. So your home would be valued at $493,000. And then your 1% bill would be $4,930. Right. Delivery or deed means the blank of ownership in real property from one person to another.
A.
It is C. So just for know, transfer and conveyance mean the same thing in real estate. So. Property tax year begins on July 1st and ends next June 30th. The first semi-annual installment becomes delinquent if not paid by when? So this is the first installment, not the second.
A.
Correct. It is late if after December 10th. That is correct. Good job, Anna. Unclaimed property. Following the instant passing of a property owner in California, the state will claim ownership following blank if no heirs are located.
B.
B. Yeah.
Correct. 5 years. You guys are good. I like this. A homeowner may qualify for the Internal Revenue Service's universal tax exclusion if he satisfies the ownership and use requirements. He must own and use the property as his principal residence for 2 years out of the 5 years before the sale. A principal residence can be what?
D.
Yeah, D.
Correct. And what tax are they excluding the homeowner from?
No idea.
Income tax.
Sorry.
No, it is from capital gains tax.
Uh,
Remember, if you buy a home and it appreciates and you sell a home, you're going to pay capital gains tax on the appreciation that that home had. So if you bought it at 200, you lived in it for 10 years and now it's 400,000 and you sell it for a $200,000 profit, they're going to tax you on that $200,000 profit. The only way you get out of that is if you have a tax exemption that from the IRS, but that means it must be owner occupied for at least 2 of the last 5 years for you to take advantage of that, right?
Okay.
One of the following is the lien date when taxes become a lien on property. So we have a lien date. When do taxes become lien? What's taxes are we talking? Sorry. It's actually January 1st, but we're talking about property taxes here. So the other one was capital gains tax. We have a sale, they make a profit, that's capital gains tax. Now we're back to property tax. So say someone doesn't pay their property tax bill, what happens on January 1st, it becomes a lien on the house, so that they'll go lien the house, right? So. If controversies arise among principals to an escrow, preventing escrow to close, the escrow holder can what?
B or D? I'm not sure.
Or D.
A.
It is A.
Oh,
If there's a legal dispute between the buyer and seller, they can't resolve it, the escrow can go file an interpleader action with court, go to court and say, hey, court, can you solve this for us, right? So.
okay.
Licensed escrow companies provide better protection for safeguarding the consumer funds. These companies are required to be members of what?
C.
Correct. Escrow Agents Fidelity Corporation. So there's going to be two companies. There's licensed escrow companies and there's closed escrows. Escrow companies. There's two different licensed escrow companies require a license, but closed escrows do not. And I'll explain that as we go on. Mrs. Blackacre sold her principal residence, which she got just 12 months ago. Blank capital gains is a gain realized on such sale.
A.
Yeah.
Correct. So when it comes to capital gains tax, there's short-term and long-term capital gains tax. Short-term capital gains tax usually is just the income bracket that's your regular income. They just treat it like regular income. Long-term tends to be lower but you must have it for more than a year to get long-term. The escrow account for the homeowner's mortgage is also called what?
C.
Correct. Yes, both the impound and reserve account and escrow account, all the same. A mortgage servicer can hold no more than blank months of payments in reserve for payment of taxes and insurance. So we're talking, we have an escrow, reserve, or impound account. They're collecting money each month from the borrower to pay their property taxes and insurance bills. How much that can they actually hold in that account at any given time?
D.
It is A, 2 months of payments. The title insurance policy that covers all risks is what? All risks.
C.
D.
I
Correct.
really don't know.
There is no title policy that covers all risks.
Oh,
To ensure a trust account balance is equal to the trust fund liabilities, a broker should employ one of the following measures.
D.
yeah, D.
Correct. All the above. Good job. Blank is a term applied to the series of conveyances and encumbrances affecting a particular parcel of land from the time the original title was granted.
A.
Correct. We call that a chain of title. A grant deed includes a title guarantee. It can include blank to the title guarantee.
B. Exemptions.
A.
Oh,
So just so you know, we're going to talk a lot about the grant deed going forward. The grant deed is the main document that transfers title from the sellers to the buyers, right? So it's important. If a landlord sells his investment property, the security deposit can be what? So we have a landlord, he's selling a property with tenants in it. He has security deposits from the tenants. What can happen with those security deposits?
I think C, if he if he keeps the same contracts.
Correct. So it's either A or B. Either they can be transferred through escrow,
See,
or they can be given back to the tenants, and the tenants have to give it to the new landlord, right? The final balance on the buyers and sellers closing statements
C. C.
Correct. See. So the final balance on each statement is what the buyer owes and what the seller's going to net. Now, it's not often the same, but it could be, but it's often different, right? So essential elements like a written contract between the buyer and seller plus conditional delivery of transfer documents are necessary to create a valid what?
C.
Correct. Good job, Richard. Escrow. You must have a valid contract. Okay, a blank is a summary statement that discloses those items about the property that are a public record in the chain of title. It's a summary. It is called an abstract of title. Abstract of title. A blank is appointed by a descendant to carry out the terms of a will.
A.
Correct. An executor or an executrix if you're a female. So the executed escrow instructions become an enforceable what? They become an enforceable
Contract.
contract. Yeah, correct. Yeah. Commissions and other income earned by a broker to be
John, I'm
collected from the
getting some
trust
kind
fund.
of delay.
What? Yours is on a delay? Is that what you said?
I'm getting some kind of delay. When you read the question and then you go through the answers, by the time they say the answer, then it pops up, the question and answers pop up on my screen,
It must.
like a
Is anyone
delay.
experiencing that as well, or
No,
I don't know if
think
it's
I'm
my
here.
end.
it must be you, Kathy? Yeah.
Maybe
Must be
leave the
me.
meeting, come back. I don't know.
Oh. Commissions and other income earned by a broker to be collected may remain in the trust account for a period not to exceed what? It is 25 days. So if you have money that you have earned and it is in a trust account with other people's money, you need to remove that money within 25 days or you're in violation of the law. Mr. and Mrs. Couple sold their personal residence for $800,000. They bought a property 8 years ago for $600,000. The taxable portion of the sale price is what? How much does Mr. and Mrs. Couple own? Oh, not oh. Oh. How much is the taxable portion? Yeah,
C,
it is a none. The reason is because they lived in the house as their personal residence for 2 of the last 5 years, so they're exempt from the 200,000 portion because they're exempt, right? Remember? Termination of escrow may be accomplished through what? Termination of
remember.
escrow.
B,
It is C, both rescission or cancellation is the same thing. Under the Business and Profession Code, section 10145, trust funds received must be placed in the hands of the owner funds in a neutral escrow or in a trust account no later than how many days? It is 3 business days. 3 business days.
knew it.
One of the following is true regarding title insurance. So which one's true? We have title insurance has no annual premium. Title insurance has no renewal premium. Title insurance has a one-time premium, including the closing costs. Title insurance is very similar to casualty insurance. Anyone?
C,
Correct, Anna. It is C. Title
Okay.
insurance has a one-time premium included in the closing costs. The blank requires escrow companies to attain an escrow license. So who licenses escrow companies? Anyone know? The answer is the Department of Business Oversight. Actually, now they're called the Department of Innovation, Financial Protection and Innovation. They just changed their name this year. So Department of Financial Protection and Innovation this year is what oversees escrow, licenses escrow companies. So when the terms in the escrow instructions conflict with the terms of the original contract, which terms take place? So we have a contract that was written and signed by both buyer and seller. They made escrow instructions based off those contracts, but now that there's an error or something and they don't line up. Which one wins? Anyone?
B,
Correct, Anna. The escrow instructions win. That is correct. When a property is sold, there's a need to allocate costs between the buyer and seller. This process of cost allocation is called proration. And the proration process uses a blank year.
A,
D,
B, a banker's year.
Oh.
A banker's year assumes it's a 360-day year that every month is 30 days. So when we prorate, it's always by 30 days, right? Even though if there's 31 or 29 days in the month, right? So a quit claim deed is a deed that what? What is a quit claim deed?
D,
It is D, correct, all those things. The probate court will appoint a blank to take charge of an estate of an intestate descendant. I think that's obvious. It is C, administratrix or administrator. A supplemental assessment is adjustment in real property's valuation is generated by a supplemental event. One of the following is responsible for reappraising real property. Oh my gosh, what's a supplemental event? What are they talking about? Oh my gosh. Anyone know?
nope.
No,
Sorry.
that's fine. It's called, it is done by the assessor's office. So I'm gonna do a little thing here. Well, let's do this. When we're talking about property taxes, everyone know how property taxes work? You should know them for the test. I do this way for us. So when you do your property tax bill, say your house is worth $400,000, okay? That means you get a 1% of your property tax bill, so your bill is $4,000. Everyone follow me?
Mhm.
Each year, the assessor's office can come in and reappraise your home. And if it goes up in value, they can increase the value of the home, which increases your bill, right?
Mhm.
But there's a rule that says, assessor, we passed this on Prop 13 way back when in 1976 or 77, somewhere in there. And it says, assessor, no matter what you say, like in Sacramento, our values have increased 12% for the last 2 years combined, 12%, 12% so far, right? But they can only go up 2% per year. That means even if it's 400,000, the property and value in Sacramento said it's 12%, so that's going to be 10. Says the value is now 450,000. Okay, in real life, but the assessor can only say they know it's 450, but they only can go up 2%, so they have to value it at 408,000 and tax you on that, even though it's worth 450. Everyone understand?
Mhm.
Okay. These was a law passed by the citizens that said, because they didn't want their taxes to go up dramatically if the value of their house went up. So as people's houses went up price went up dramatically, they're getting huge tax bills and they didn't like it, right? So they passed this law that says, assessor, you only can do 2%. And they also passed another law that says, assessor, you can only charge 1% of the value of the home as a tax bill across the state, right? But they also gave one thing an advantage to the assessor. They said, when the property transfers to a new owner, you can reassess the property. So, for example, say it's 4.8. Say they sell their house, but they sell their house at 450. Now, it was a tax bill at 408, but now the assessor, say they sell the home on this December 31st, New Year's Eve, they close, sell the house on 408. Now, the assessor can go then and say, hey, you bought the house at 450, new owner, you don't get a 408 value. The new owner has to pay a bill off of 450 value because that's what it's sold for.
Mhm.
Everyone understand? Okay.
I get it.
So now let's talk about the tax line. What's a supplemental tax bill? So we know the tax year starts on July 1, right? And ends on June 30th, right?
Mhm.
And we know that the middle is kind of Jan 1, right? Okay. So, for example, let's take this example: $400,000 house, 2% increase is valued at 408, but really the real value is 450, and it sells right here on January 1st, December 31st, right? Well, when the assessor billed this house, it made the bill for the whole year, but the bill was based off $408,000, right? So it's going to say, hey, great, you owe $4,080, but you're gonna $4,080, but you're gonna pay it over two installments. So you're gonna pay $2,040 here, you're gonna pay $2,040 here, right?
Mhm.
Now, when you close the deal on January 1st, they're gonna pay off these bills. Well, this should already be paid, but the escrow is gonna make the buyer and seller pay off that bill, right? So the assessor gets paid, but the assessor says, wait, I get to reassess the property from 408 to 450 on January 1st. And I only billed you for a 408 value. I should be able to get 450 price tag for here to here. Make sense?
Mhm.
And so they say, well, for 6 months, it should have been 450 and you only paid me 408. So it's 42,000 difference. So $420. So it's $420 difference. It should have been half of that for half a year. So you owe me an extra $240 because you paid a 408 tax bill, 408,000 tax bill from here to here when it should have been a 450 tax bill, right?
Okay.
That's called your supplemental tax.
Oh, okay.
Makes sense? Because if you buy in the middle of the year, no matter where it is, if they already assigned a value to that home and the house sells for more than that home, then the assessor is going to come in and take the difference and bill you for the difference, right? Because they set the bill at a lower level than it should have been, right? Essentially, in this case, on January 1st, the assessor should have been able to come and says, nope, buyer, don't pay 2,040. You should pay us for 450 for half a year. And they didn't. So they have to come in later and do it. And that's called a supplemental assessment. Clear as mud?
I got it.
Okay. Let me go back to this. Okay. So that's when they talk about supplemental assessment. The Tax Reform Act of 1986 requires the reporting of a real estate sale to the IRS. Persons responsible for such reporting include the following except
D.
correct. So the IRS asks, so now every time there's a sale that happens, they report it to the IRS so that make sure people aren't trying to cheat them on capital gains tax, right? So for a deed to be recorded, it must have which of the following information for the purpose of sending a property tax bill?
C.
Correct, good job. The grantee's name and address, because it has the buyer's address and the tax bill. So one of the things we're going to be looking at is the deed, grant deed. There's a few things that you have to have in California to have a valid grant deed. One of those is the grantor's name and address has to be on it, right? So to effectively convey a valid grant deed, a deed must contain a blank clause. It is a granting clause. So we already know that it's got a grant clause, a grant deed must have the grantee's buyer's name and address on it. It also has to have a grant clause that says, sellers are selling this, are giving this property to this person, right? So a document that has been recorded is said to have conferred what notice? It is a constructive notice. So
Okay.
one thing that you have to have is when you sell a home, you have to give notice to the public for a grantee to be valid that it has happened. And the new owner is this person. That is called constructive notice. Now, you don't have to record it at the county recorder's office to give constructive notice, but that's what most lenders and people observe as automatically qualifying for constructive notice. So all houses in California get recorded, their grantees get recorded at the county recorder's office as a way to make sure that constructive notice happens to the public. The government seizure of private property is to build a road or a courthouse is known as what? Oh, people should know this.
C.
Correct, eminent domain, Anna. Good job. Ad valorem is a Latin phrase which means what? Ad valorem.
C.
Correct, according to value. Correct, which is good.
Hmm.
Which is like a sales tax or property taxes. Is ad valorem, right? Which of the following are covered by any policy of title assurance? Any policy of title assurance. So toughie. It is D, none of
D.
these.
Oh, okay.
Yeah, so just so you know, title insurance's policies don't cover zoning issues, environmental protection laws, or subdivision or building codes. So. A legally delivered deed means more than turning over the physical possession of the deed. Further, the grantor must do what? Must have what?
B.
Correct the intent. Good job, man. That was a hard one. So we have a grant deed. We know this document is how we transfer title in California. We know we've got to have the grantee's name and address on it. We know it's got to have the grantor's name on it with a granting clause saying the grantor is granting it to the grantee, right?
Mhm.
Now we know it's also got to be handed, or it's got to be delivered from the grantor to the grantee, and it's got to be, the grantor has to intend to deliver it. Right? So that means you can't put a gun to his head and say, give me, sign over your property to me, right? That would mean not having an intent to transfer it, right? So acquisition of a real property through adverse possession must be done by a party that what? What's adverse possession? Oh.
Squatters' rights.
Yeah. Like if they don't pay their property taxes, then a squatter can go and take the home.
Correct. So one of the legal standards, they have to believe they own a home or have right to the title. So remember, it's 5 years. They have to pay the property tax bill. They must live in the house open and notoriously. Right? So, open.
Mhm.
When a deed is found in the possession of the grantee, the deed is said to have a valid what?
B.
Correct, delivery. So we already know a grant deed must have the grantor's name, granting clause to the grantees with the name and address. We know it's got to have it's got to be delivered, and it's got to have, and the seller's got to have the intent to deliver. And if it is in the possession of the grantee, it is considered delivered. A recorded document is indexed alphabetically according to what?
A.
Correct, the grantor and grantee. So we already know there's another provision to the grant clause. It must give constructive notice. That means it must be able to notify the public that this transfer of property happened. We in California recognize constructive notice as recording the document at the county recorder's office. Now, legally, you can have constructive notice happen different ways. It doesn't have to be recorded at the county boards, but that's just a tradition we have adopted in California as a way to show constructive notice. When they file it at the assessor's office, it is recorded under 2 ways, under both the seller's names and the buyer's name. So you can look up either name as a way to find that grant clause, right? So one of the following is not a basic requirement for a will to be legally binding. What is not a basic requirement?
D.
We have, is that, did you say D?
Yeah, D.
Right. So in California, you must have a holographic will, which means you got to have it in writing. It's got to be signed and dated by the person who made it, and there must be signed by at least 2 witnesses to have a valid will in California. But don't worry, wills don't get you out of probate though. So termite inspection reports are considered current and accurate for blank from the date of issuance for the purposes of real estate transaction. So how long are termite inspections current for?
No idea.
It is B, 90 days.
Okay.
90 days. Closing statement is also called what? What is also called the closing statement?
A.
Correct, the settlement statement. Very good. All of the following are examples of ad valorem taxes, except what?
E.
Correct. Those are all valid on taxes. An escrow impound account is an account lender set up to pay certain blank property related expenses on the homeowner's behalf.
A,
Correct. Recurring. Good job, Anna. Recurring. California law exempts certain persons and companies from escrow licensing requirements when they engaged in a controlled escrow. Sorry, I call this closed escrow. Controlled escrow. These exempt persons and companies include the following, except. So there's this, remember, we got we know that escrow companies need to be licensed by the Department of Financial Protection and Innovation. But there are certain escrows that can be done, known as controlled escrows, where you don't have to have a license. So who are these people?
Is it B?
No. So California law allows financial institutions, insurance companies, and real estate companies to do a controlled escrow. What does that mean? That means they are party to the transaction. So real estate agents, real estate brokers can open an escrow company in California, but we only can do without a license, without an escrow license, but we only can do escrows on transactions that we transact, where myself or my agents are representing one of the parties in the transaction, right? Or same with a bank. If a bank is doing if a bank is buying property, the bank can, or the insurance companies are buying a property, they can do their own escrow as long as they're parties to the transaction, right? So.
okay.
The broker's commission is considered earned when the contract is signed or executed and the commission is paid.
A.
At closing, yeah. You only get paid at closing, that's it.
Mhm.
The structural test report is given to the person who ordered the inspection within blank working days.
B.
Correct, 10 days.
Oh,
But usually they'll give it to you quicker than that, but their law is 10 days. A document is believed to be recorded when it what?
C.
It is D, all the same, all those are the same.
Oh, okay.
Seller paid points are what? What are seller paid points? Anyone know what seller paid points are?
No.
C.
DRC. So often we call these seller credits. Okay, that means a buyer can go to a seller and say, "Hey, I want to buy your house, and I'll pay for it, but can you give me a credit of $5,000 or 1% of the purchase price toward my closing costs?" Now, why would a seller do that?
Oh.
The seller would do that because maybe they don't have any other buyers.
Oh.
And the seller buyer's like, "Hey, I can do your deal. I can close it, but I only have enough for the down payment. I don't have enough for my closing costs, but I'll buy your home for the price you want. So help me out, buyer, seller. You help me out, I'll close the deal. You'll get some money. You get a little less money, but but you'll get to close the deal, right?" So
Mhm.
call those seller paid points or seller credit. It means where the seller is going to give a credit to the buyer at the close of escrow. That money can then be attributed to the buyer's closing costs. It can't go to the down payment. It can go to the closing costs, though. All right. An impound account is added to a monthly PITI. In this regard, PIT is acronym for what?
A.
Oh,
I think it's B.
I was gonna say B, but I don't know.
It's B. It's principal.
Okay.
Principal. A supplemental tax bill, which we talked about, is an additional tax added to property to do what? Oh, this is different. Okay. This is different. Okay, I gotta do this. So this is for C, local upgrades. Okay, so there's two things. There's a supplemental tax bill, and then there's a supplemental assessment. Okay.
Okay.
What we talked about where, they have to true up the bill because you bought it in the middle of the year, right?
Mm-hmm.
That is a supplemental assessment. Okay. A supplemental tax bill is, you'll get this if like your neighborhood doesn't have streetlights, and then the city comes in later and installs streetlights for everybody, right? But the way they pay for it is they say, great, we're going to install streetlights to make the neighborhood safer for everybody, but the whole neighborhood is going to pay for it. What they do is the city will issue bonds with 30-year horizons or 10 or 20-year, 30-year horizons on them. They use that money. Investors buy it. They use that money to pay for the lights, and then the homeowners in the area pay an additional tax bill for those lights over time. Does that make sense? We call that a supplemental tax. The due process that a taxpayer may initiate if there's a conflict on the assessed value of the property is what? So we know that the property tax assessor, the assessor comes out every year and assesses the value of your home and signs a tax bill to it. But what if you disagree with that amount? We say, assessor, you don't know what you're talking about. This is the value.
C.
Correct. It's called an assessment appeal. Good job, man. Blank is a tax imposed within a particular area that benefits directly from public improvements such as streetlights, sewers, and pavements.
A.
Correct. Special assessment. Correct. Grant deeds do not have to be recorded or notarized to be valid. However, most buyers and sellers prefer to record or notarize their deeds mainly because
C.
correct. They want constructed it. Escrow agent Cruz realized that escrow instructions did not specify a closing date. This being the case, escrow will close when?
D.
It is A, within a reasonable time,
Oh,
which is typically 30 days. If escrow does not close on a specified date, the usual solution would be
B.
correct. You just write an addendum to extend the escrow. Correct. Money that goes into an impound account is not a cost of doing the loan. Instead, it's money that belongs to who? So when you put money in the impound account, they collect it every month. Who does the money belong to?
Mortgager. C.
Correct. It belongs to the lender. Good job. Oops. Sorry. Escrow companies in California are classified into two basic categories. An escrow company that is licensed by the California Department of Oversight, now known as the Department of Financial Protection and Innovation, while a blank escrow is unlicensed by the department.
A.
Correct. Licensed. And if you're not, you're controlled. All right. Good job. To acquire property by adverse possession, the following criteria are required except
D.
D.
correct. Internal wills are considered blank because as long as the testator lives, it can always be changed or altered.
B.
Correct. Ambulatory. Correct. Mr. Abel sold a property in December 2009, but was scheduled to collect payments in the following tax year and beyond. He is a beneficiary of what?
B.
A. Oh,
an installment sale. So why would Mr. Abel do an installment sale? So that means like he's selling a property, he sells it for 500,000, but he says, you know what, give me 100,000 now, and then give me 100,000 every year for the next 5 years.
Or for tax benefits, so he doesn't get.
Yeah,
capital
so remember,
gains.
we're on a progressive tax scale, right? So if he took all 500,000 profit, his tax bracket may be 39%, right? on that, right? So he may want to like, you know, have it only be 100,000 because we only did 100,000, maybe his tax percent is 30%, right? So if he takes 100,000, he's going to pay less taxes over time than just having it all taxed at 39%, right? So we call that installment sales. California imposes sales tax through the State Board of Equalization upon blank for the privilege of selling tangible property, personal property at retail. Yes, it is retailers. That is correct, because that's where you pay the sales tax. Marginal tax rate described as what? What's the marginal tax rate?
D.
It's all the above. So the marginal tax rate is always, it's kind of like, because we're on a progressive scale, it all says, hey, if you paid this next dollar, what would your tax rate be, right? So one of the following payments is not automatically included in the impound account.
C.
It is D, homeowner dues, yes. A document held in escrow and then delivered later will be treated as if delivered when it was put into escrow is an illustration of the blank doctrine. Called the relation back doctrine. Relation back. A blank includes everything that's in a standard title insurance policy plus defects found in the property inspection.
The B or A.
A, extended, yeah. A broker must record a deed of trust created on the sale of property with the county recorder of the county where the broker is located within blank days after closing of the transaction. So we sign the trust deed to do the sale. How long before I have to record it?
D.
Correct. One right. Good job. First to record is first in right refers to what? What is that an example of? Or
C.
correct, it's recordation. So when you record, remember, record liens, the lien that's first recorded by date and time is the one that gets paid off first in the event of foreclosure. A sells a property to B and executes and delivers a grant deed in favor of B. B receives a grant deed and stores it in his safe, and A then sells his property to C, who records the deed. Super shiesty guy. Legal owner, the legal owner of the property is who?
B. A, which is B.
Yeah, it would be it. Yes. Okay. California provides a blank reduction in the taxable value for a qualified owner occupied home. Oh, we talked about this very first. It is 7,000. 7,000. Yeah. The American Land Title Association policy is best known as what? The ALTA, ALTA.
Lenders, C.
Correct, it's known as a lender's policy, that's correct. A reservation clause in a deed of real property is used when when the blank chooses to reserve a portion of the property or use the portion of property such as an easement for their own use.
A.
Yeah.
Correct. When the selling of rental. Blank is a reversion right of the intestate descendant's property to the state when heirs capable of inheriting are lacking. Well, what do we call it? My gosh. When the state gets your property because they can't find any heirs, what do we call
A shit.
that? A sheet. Correct, a sheet. In general, a deed is not effective unless accepted by the grantee. Exception to this rule be when the grantee is what?
B.
Correct. Oops. Yes. The United States imposes taxes on income applying what kind of rate structure? What kind of tax rate structure do we have here? Tax structure for incomes.
Progressive taxes.
Correct. We have a protective tax system. The Improvement Act of 1911 funds what?
C.
Correct. Both of those. Yeah, Kathy keeps trying to join, but she can't connect. It's weird. After 5 years of non-payment of property taxes, the property tax will be sold at a tax sale to pay the state and county in which the property is located for delinquent taxes. The successful bidder at the sale will receive a what?
A.
A or B.
It is B, a sheriff's.
Oh.
So we call a sheriff's deed as what is recorded anytime property is taken from someone involuntarily. If the government takes property from someone involuntarily, we call that a sheriff's deed, right? So, because the sheriff is the only one with the police power to seize property, right? So. The following are examples of capital improvements that add value to one's home, except what?
D.
Correct. Several states do not recognize the validity of a holographic will. Nonetheless, holographic wills are recognized more widely than blank wills. Put the door there.
C.
B.
Yes. So oral wills and non-cooperative wills are both oral, like orally spoken wills. Yeah. A tax shelter is a means of reducing one's tax liability. The most widely used tax shelter is what?
D. All of them.
Oh, that's correct. The most common method in which an escrow is completed is what? Ah, what's the most common method?
A.
Yeah.
Title plans, also known as blank plans, are used as the basis for title insurance policy issuance. It is A, abstract title plan. A property owner needs to know the blank to report a gain or loss on the property for income tax purposes. Needs a what? Oh, what does he need?
A.
Basis. Correct. So you always calculate property tax gain or loss, capital gains tax, based off the basis. So if I bought a house at 200 and I sell it at 400, the basis is considered 200, right? A building that was bought for 800,000 but has depreciated 100,000 has a book value of. Yes, it is A.
A.
100,000.
Yeah.
The standard policy of title insurance would not cover against what? Standard policy. Oh, let's see. Would not cover what? And you can answer this question by noticing a group of things versus another thing, not even knowing the answer.
C.
Correct. Encroachments. A standard policy in title only goes against defects found in the public records or forged documents, all dealing with the documents, but not with the issue of the property itself. So all the following are essential elements of a valid deed, except, oh, we got essential elements. So we got granting clause, description of the property, names of the grantor and grantee. Got to be delivered. You've got to have the intent to deliver. It's got to be, you know, publicly noticed, constructive notice, but it does have to be in writing, right? So once a property owner dies, intestate title to the property descends to the heirs by law according to the rules of intestate.
A.
A.
Succession, correct. A holographic will is a will that is what?
E.
Correct. All of the above. An exception is a clause in a deed in which the grantor blanks certain rights from the transfer.
B.
What? It is
C.
C. It's an
Oh.
exception. It accepts.
Oh.
Not exemption. If it was an exemption, it would exempt. But exceptions accept. A title company will do title search before issuing a title insurance policy to determine what, if any, defects are affecting the titles of the policy. The title search produces a report known as what?
E.
Correct. A preliminary title report. One of the fine purchases is exempt for California sales tax, sales and use tax. What is exempt from California sales and use tax?
A. D, all of the above, yeah.
All the above, yes. A right of way, like a walkway, is a common example of an easement by what? Oh, how do we have a right of way? What do we call it? Easement by what?
E.
Correct, prescription, because it is there. When we do a prescribed, it's because we're putting the easement in because it's required. I mean, like, you know, it's a right of way. You have to put it there because you have to have public access, right? It's prescribed there. So, an agreement permitting a buyer to take possession of a property as a tenant prior to close of escrow is referred to as what?
B.
Or B.
Correct, interim occupancy agreement. As brokers, we highly against this. There's a lot that can go wrong, but they do happen every once in a while. By default, delivery or possession should be what? So when should we deliver possession?
C.
C.
Yes, at closing, very good. In California, a standard policy of title insurance is sometimes referred to as what?
B.
Correct, the CT. Oh, hey, it is 6:42. We have finished a little, but congratulations. You did section 5, transfer property. Transfer property is actually a little bit of a difficult one, right? There's a lot of terms and moving parts on this. So I'll be fast on. We're going to be doing practice of real estate disclosures. Starting next week.
I did have a question, but it has to do with like fee simple estates.
Okay, what is that?
Okay, hold on. Let me read my notes real quick before I say it.
Absolutely.
Oh, okay. So if the owner gives a parcel of land to the city under the conditions for it to like be a park, if they violate that condition, does the land go direct? If the land goes directly to the remainder man, does it have to continue to be a public property, or they can do whatever they want with it?
It depends on how the grant deed was written.
Oh, okay.
Normally,
either way,
in
it just
normal
goes-
cases that we call that fee simple defeasible, where you restrict you condition the property for certain uses only, right?
Yeah.
Generally, that will pass through to anyone who owns the property subsequently. Unless
Okay.
there's a clause that says this is only on this owner and it won't apply to the remainder owners, right? Makes sense. So.
Okay. And then also this about life estates. If a person has a life estate and they choose to refinance the house and then that person dies,
Mhm.
who's responsible to pay for that? The remainder man, or like what? Sorry.
Who is responsible to pay for the loan?
Yeah, if the person that has the life estates is the one that refinanced the house.
So if a person takes a loan on the house, the loan does not transfer to the new owner, okay?
It does not.
Because the owners, they did not take the loan, right?
Mhm.
So what happened is if that person dies and the property will then transfer to the new owner, that person who dies still has an estate. Right?
Mhm. Oh, okay.
So essentially they would take that estate, liquidate anything in the estate and attempt to pay off the loan. Right?
Oh, okay. I
And
was
the
just
lender,
wondering
if
that
they're
was gonna have
short
to go to
money,
the new
well,
owner.
that sucks to be the lender, right? So,
Yeah.
so you can't, a new owner cannot assume another person's loan, right? So
Okay.
unless
That's what I was.
you were joint tenants and the other person died and you were already, and you assume that loan too, right? So unless it was for that kind of arrangement. But
And I guess also,
the life estate wouldn't transfer, right? So yeah.
and I guess like on the same note, like if someone has a life estate, okay, and then they sell the house, but then the person that has the life estate dies, who gets the house? The person that just bought it, or the?
Oh, okay, let me explain. Okay, say I have a house. I say, hey, Richard, you get the house until you die, all right?
Uh-huh.
It goes to you, Anna. Okay.
Mhm.
Okay. Richard has it and he sells it. He sells it to Maria. All right.
Yeah.
He sells it to Maria in the middle of this, and Maria says, okay, I'll buy it, I'll pay you, but then Richard has to tell her it's a life estate. And it only is, you only own it as long as I'm alive.
Mm-hmm.
Richard is alive.
Mm-hmm.
The life estate doesn't transfer to Maria. Does that make sense? It's still Richard's date of death, right?
Okay.
And then when Richard dies, Maria loses the property and transfers to you, Anna, right? So,
Okay.
make sense? So
Yeah.
the person
Yeah.
who is on the life estate doesn't transfer just because they sell it, right? But
Mhm.
obviously, if Richard was selling it, it would greatly diminish the value of it because the person who's going to buy it only can own it while Richard's alive, right?
Mm-hmm. Yeah, I just didn't really see the point, so I was just wondering.
Yeah,
what
you
would
don't
happen.
see life estates often being sold just because of, of that. It's usually, it's usually an inter-family thing. So life estates only happen usually on families. So you'll see it a lot like husband and wife have a family, family's grown, kids leave, wife dies from cancer or something, husband remarries, kids don't like the new wife. Right? But they have property, they have money, and the husband's worried that the kids are going to come in when he dies and kick the wife out, right? And
Okay, yeah.
so the husband's the dad will be like, well, they're my kids, but I want to protect my wife. So let me give the wife, I'll transfer the property to my wife in a life estate. Right?
Mm,
And when my wife dies, and maybe the wife has other grown kids from another marriage, but I don't want the property to go to those kids, right? So
uh-huh.
I'm going to do a life estate and make sure it reverts, it goes to the remainder man, which will be my current kids, right? So that's
Mhm.
oftentimes you see something like that happen. Oftentimes, if you see it sell, right?
Mhm.
Sometimes it's often like the life estate is with the grandmother, right? And now she's getting old, she has Social Security or something, right?
Mhm.
And because she has kind of a deadbeat family, her son moves in with her. Okay. So
Yeah.
son's living with her, life estate, husband's dead, life estate, kids are waiting for the property, right? And she wants to her Social Security is getting messed up because she owns property, and now she's not qualifying for as much from Social Security because she has assets, right? So what does she do? She sells her life estate to her son, right?
Yeah.
The son pays her $1,000, gets the property. Now she doesn't have the property. Now she gets her full Social Security payment. It's in the son, but the son will lose the property when the mom dies.
When she dies. Okay.
Right? So, makes sense. So that's
Got
often why you don't often see sales of life estates. It's only in kind of unique situations like that, right? So
Mhm.
I hope that answers the
Okay.
question. All right. Any other questions?
I had one more question. The second installment for property taxes is late
On April 10th.
April 10th.
It's due February 1st, late on April 10th. The other one is due on September 1st, November 1st, late December 10th. The first installment.
Got it.
All right. Everyone, hope you have a good day. Or good evening, I should say. Thank you for sharing your time with me. I know it's valuable, and I hope you pass your test soon and get your real estate license and make it happen. All right. So
Alrighty. Thank you.
thank you. Bye.
Good
Thanks.
night.
Thanks.